I did have a lot of clients reaching out to me saying, hey, listen, I need to refi my home. I've got $1 million of equity in it. And I said, okay, well, listen, send me your last few months banking statements. The bank's going to want to see deposits. Like, well, I don't have any because my business got shut down. I'm like, well, that's going to be a problem. Yeah, but John, I got $1 million of equity. I understand, but the way the bank looks at it, if you don't have income coming in, how are you going to pay for that home equity line of credit? They don't care how much equity you have. And there was a few clients I said, hey, do you remember that policy we started 5-6 years ago? Let's take a look at how much cash value. What is the maximum loan amount we can get you? Well, if I can't qualify for a bank, how do I qualify for that? I go, that's the great thing about this. Do you remember? You know who made it. Welcome back to the Wealth Easy Show, where we talk all things wealth, health, and real estate. Folks, I got a real special treat for you today. Today on the podcast, I am thrilled to welcome Jayson Lowe, the CEO and founder of Ascendant Financial, Inc., an agency specializing in the infinite banking concept and its American subsidiary, 𝐉𝐚𝐲𝐬𝐧. Jayson is also an author of Cash Follows the Leader and Canadian's Guide to Wealth Building Without Risk. He is a co-host of his own podcast called the Wealth Without Bay Street podcast, sharing insights to becoming your own banker. Folks, this is an episode you're not going to want to miss. Jayson, welcome to the show.
It's a pleasure to be with you. Thanks for having me, John.
Amazing. Give our listeners a 2-minute bio about yourself. I know you can probably go on for at least a half hour, but let's keep it to 2 minutes.
Well, I guess what I would say to your listeners is that I can relate. My journey in transforming myself financially, that began for me back in July of 2008, and it's been an incredible ride, since then. But I share with people all the time, including yourself as a colleague in the industry, I'm the sum parts of everyone who's mentored me. And so I would share with people who are listening and watching, they don't really care all that much about my bio, but I would share with them that there is absolute value in being coached, being mentored, realizing that there's no destination or landing spot for your potential. And that's not only for you personally, but that's for, the objectives that you want to achieve in your lifetime, whether it's more freedom of time, purpose, relationship, money, all the above. And so I'm just humbled and grateful to be here. And, we've been specializing in this process. We're going into our 16th year, and we proudly serve Canadians coast to coast, and now proudly serving Americans as well. And you and I had an opportunity to get to know each other at an event in Denver, of all places, and we're both Canadian.
Yeah.
And that's how we got to know one another. And I think this is just a sharp example of abundant-minded thinking, where we can be on each other's podcasts and really see the value in collaboration and sharing a great message with people. So again, sincerely, thank you for having me.
Thank you for your time. I appreciate it. And, one of your mentors was Nelson Nash.
Absolutely.
Unfortunately, he did pass away. And, that's what I want to talk about, the infinite banking concept, because there's a lot of people now asking me about how to become your own banker. I promote the infinite banking concept. I talk about becoming your own bank. This is one of your underlying principles that you practice within your firm. And Nelson Nash, who wrote Becoming Your Own Banker, was your mentor. So, explain to my listeners the principles and the infinite banking concept.
Well, the essence of infinite banking really is to recapture the interest, the money that you presently pay to banks, credit card companies, finance companies. It's all about controlling how you finance the things that you need throughout your lifetime. And if you think of all those things that you need throughout your lifetime, whether it's properties, perhaps some really high caliber investment opportunities, vehicles, education, appliances, weddings, vacations, the list goes on and on and on. This is about controlling how you go about financing all those things throughout the course of your lifetime. And I was blessed beyond the definition of good fortune to be mentored by Nelson. He's right here beside me each and every day, and every interaction that I have. I miss him. I think about him every single day, and I owe him a debt of gratitude that I can never repay. The one thing that he did ask of me a few weeks prior to his passing in March of 2019 is he said, I want you to remember that this is about the message, not the man. And so he really wanted people to get their hands on a copy of his book titled Becoming Your Own Banker. It's a self-published book. It's sold more than 550,000 copies. I do not know any other self-published author on planet Earth who has sold that many copies being self-published. And there's a reason. It's because the process works. And when people are online on social media, there's a lot of messaging out there about the infinite banking concept. And some of it is ridiculously simple, as it should be, and some of it is sensationalized. And the one thing that Nelson shared with me so often throughout the years is that infinite banking concepts is meant to be ridiculously simple. It doesn't need to be sensationalized. You're going to need the use of money throughout the rest of your lifetime. That money must come from a supply source. Very few people recognize the significance that banking plays in their lives, let alone the importance of it. And so they end up abdicating the opportunity and the responsibility of that function as it relates to their own personal needs. And that personal need is for finance, use of money. And so this concept enables somebody to gradually and incrementally take control of how they finance those things that they need throughout their lifetime. And that's really the essence of it.
Yeah, and it doesn't happen overnight. It's like it does take time. Just like, you can't, if you're building savings inside of a bank, it takes time before you build enough to go out and purchase a car, go out and purchase appliance, pay for a house, or make major capital purchases. It does take time to achieve. But what I love about the infinite banking concept is that you don't lose. And when you build up this massive cash value, you then become the bank. There's no more asking permission to borrow money. There's no more application process. There's no more credit checks. There's no more some college kid sitting across a desk saying, you don't qualify because you don't have a job, or your ratios are out of line, or your credit score is too low, right? There is no qualification. It's a no questions guaranteed access to this money. How does the infinite banking strategy help individuals build wealth and achieve financial security in the long term?
Well, I mean, if you look at the distinction between what you're buying versus what you're implementing, the answer is again ridiculously simple. So what you're buying is the life insurance policy, or ideally a system of policies, dividend paying whole life insurance contracts. And inside of those contracts, you're accumulating contractually guaranteed daily accumulation of cash value. But most, even all due respect to amazing colleagues in our industry, wonderful, wonderful advisors who are doing great work every day for their clients, most advisors that I talk to have no idea that cash value isn't money. It's not money. It's just the net present value of the future payment of a death benefit. The way that you create access to money is by taking advantage of that guaranteed policy loan provision, and you borrow against that accumulation. That's all product focused. I bought a product. It's a tool to implement a process. How do I build wealth? Well, wealth isn't money. I know that I sleep extremely well at night. I have a very peaceful, stress-free financial way of life because I don't rely upon conventional banks for anything other than the convenience of debit. And it took me 13 years to get there. And I'll share an example real quick that speaks perfectly to this, because I'm always describing infinite banking concepts ensuring that people understand there's a difference between what you're buying versus what you're implementing. And this is where marketing really blurs those lines on social media. My wife, Rebecca, and I, so we purchased our first principal residence together. This was back in April of 2008. And at that time, I hadn't even been introduced to the concept yet. I didn't even know about the infinite banking concept until July of that year. And the mortgage that we had taken out on that property, it was about $426,000. The interest rate was great. I was of that consumer mindset. If I get a low interest rate and a 40-year amortization, I thought, my goodness, I've struck gold. And then when I discovered this process and I began to implement it in my own life, I got really aggressive about wanting to get rid of the conventional bank as it related to that 40-year amortized mortgage. It took us 7 years to achieve that. The first person I called was Nelson. And I said, Nelson, you're not going to believe it. I got the bank out of my life. And he said, don't be in such a hurry to celebrate. You signed on for a 40-year amortization schedule with someone else's bank. Mm. You need to be an honest banker and finish that original loan schedule. You're just going to change the process of who's getting the money. So now those payments, that stream of payments, which is the real asset to the bank, that stream of payments is flowing back to our family's money pool. That creates a very peaceful, stress-free way of life financially. And Nelson wants, again, God rest his soul, but he wants people to become their own banker. He wasn't encouraging anybody to become an institution. He doesn't want us to become a bank. He wants us to become the banker as it relates to our needs financially throughout the course of our lifetime and for every future generation that comes after us. And so people get really excited about the tool, the product, which is great. There's a lot to get excited about there. You can contribute almost unlimited sums of money. You've got no tax on the daily buildup. You pay no tax on the death benefit proceeds. You've got ready access capital on demand on your terms. So logically, how much of your capital do you not want residing there? It's a great tool.
Absolutely.
But Nelson often said, you can put the best tool to get the job done in the hands of an incompetent. And not only will that person not turn out any good work with the tool, they're going to break the damn tool. Mm-hmm. And so that's why it's really important to understand that this is a concept. This is a process. It's not a product. You need the insurance policies to implement the process, but they're very distinct because you're going to build that accumulation regardless. If you never exercise the policy loan provision, you're going to get that contractually guaranteed buildup. But if you're not implementing the process and becoming the banker as it relates to your needs, you're continuing to abdicate that responsibility to someone else. And more importantly, the opportunity, which means, John, if you and I owned a Loblaws grocery store together and you said, look, I love being a co-owner of this Loblaws, but I'm going to keep buying my food from Walmart. Well, you and I are going to have a conversation. Like, that's not good business practice.
Right.
You should be buying your food from our Loblaws. Regardless of the price difference, right. It's where do we want that financial energy flowing to? And so that's why I get so excited about this process because, John, I've never had a client call me in 16 years, not one. Who said, Jason, I'm really pissed off that my cash values keep growing every day. And I'm really frustrated that I'm taking greater and greater control of how I finance all the things that I need in my lifetime. It's really bothering me. Oh, and if I die early, I'm going to be a hero to my family. And if I live a long time, I'm going to be a hero to my family. That's really frustrating. Boy, did I ever take a left turn financially. You know what I'm saying?
Yeah, yeah. Hey everyone, it's John. I just wanted to thank you for being here, and I would ask that you please subscribe to the show by just clicking the subscribe button right here. I'd really appreciate it. It helps grow the show so we can get even more successful guests on the program to help you. If you're already subscribed, a huge thank you. When you subscribe, you're going to get access to the program before anybody else does. So if you would, just click subscribe right here. Thanks so much, and welcome back to the Wealth Easy Show. I definitely never had a client during the COVID pandemic who couldn't refinance their home because their business was shut down, get mad at me and saying, hey, I'm really mad that you set up that insurance policy because I got a no questions asked loan when the bank wasn't going to give it to me.
John, that is so true. I can tell you that countless number of clients, especially there was a really high incident of clients in the practice of chiropractics or dentistry, or where these professionals need to see patients and they couldn't see patients.
Yeah.
And so they were calling and saying, thank goodness I had ready access to capital, because not only did my practice stay open, but I didn't have to let go of any of these team members that have been doing such a great job for our business all these years. And it carried them through. So it's not just about, creating wealth in terms of whatever that definition is for people. It's about that peaceful, stress-free way of life financially that there's far less significance placed upon, because we think that we've got to go to the marketplace and say, look at all the attributes of this great tool.
Yeah.
And a person's like, well, I get it, but we haven't helped them understand the problem. So the solution really just doesn't matter to them. It's just another financial tool, versus educating, ongoing coaching, and helping people to achieve those wins financially, where they start to gradually and incrementally take control of how they're financing things. They start to grasp it and they go, oh my goodness, I get it. Yeah. I'm in a position of total and absolute control, and I don't have to play their game anymore. That's the essence of the infinite banking concept.
Yeah. I'm in the mortgage business too. And during the pandemic, I did have a lot of clients reaching out to me saying, hey, listen, I need to refi my home. I've got $1 million of equity in it. And I said, okay, well, listen, send me your last few months banking statements. The bank's going to want to see deposits. Like, well, I don't have any because my business got shut down. I'm like, well, that's going to be a problem. Yeah, but John, I got $1 million of equity. I understand, but the way the bank looks at it, if you don't have income coming in, how are you going to pay for that home equity line of credit? They don't care how much equity you have. And there was a few clients I said, hey, do you remember that policy we started 5-6 years ago? Let's take a look at how much cash value, what is the maximum loan amount we can get you? Well, if I can't qualify for a bank, how do I qualify for that? I go, that's the great thing about this. Do you remember when I told you it's a no questions asked, it's 100% guaranteed? He goes, no credit application? I go, no. Fill this one piece of paper out. I'm going to put your policy number on it. We're going to put the amount that you want. You sign it. And in like 10 days, you're going to have the money in your account. Right. There was a couple of clients that unfortunately didn't have a whole life policy with me. And I talked to them about it. I said, hey, if you had this, we could have done that. Once their businesses opened up, I had a few of them call me and go, hey, do you remember that life insurance policy thing you were talking about? I want to get started because if this happens again, I want to be protected because the bank didn't help me out when I needed it, and this will.
I love that. And credit to you for keeping that message in front of them and sharing the importance of it. Because think back to, like if you were to look back on the last financial crisis, so there were just an overwhelming number of high caliber opportunities, but there was no ready access capital to take advantage of them.
Yeah.
So the system literally was that close where credit essentially came to a grinding halt. That didn't happen with the life insurance carriers and their policyholders who needed ready access capital to take advantage of really high caliber opportunities that presented themselves. And so we also have a number of amazing clients who have and recognize and see that. And when the next wave of opportunities presents itself, they are fully capitalized and ready to take full advantage of it without having to worry about all of the hoops and the hassles that a person needs to go through. And as it relates to real estate, I often share with folks, you hear, and you know this, being in the real estate business, you know the most common phrase used in the industry, location, location, location.
Yeah.
It's location of the equity, location of the equity, location of the equity. And so going back to my own personal example, I wouldn't have gotten rid of the conventional bank that quickly. knowing what I know now.
Mm-hmm.
I would have kept ready access capital on hand to take advantage of high caliber opportunities that I ended up passing up a number of them because I wanted to get rid of the conventional bank as fast as possible. But I would have done it differently in hindsight, knowing what I know today. And that's the beauty of never arriving in knowledge, right? There's always
I know a
something.
bunch of guys who took advantage of the housing crisis, like in Las Vegas and in Florida. I know guys who picked up a portfolio of homes for like 40 cents on the dollar because they had access to cash when nobody else
Yeah.
did.
Yeah.
Right. And that time is going to come. That time is going to come again.
Yeah.
Right?
Absolutely.
It's going to happen. You know, there's been a really big debate in the industry using universal life or whole life when doing an infinite banking concept. Now, I know what Nelson Nash says that you should be using, but I want to hear from you your answer to that debate: UL or whole life?
Well, I guess I would just say again, every financial product has its own set of characteristics, and it's important to just understand that. It's not that a financial product is good, bad, or otherwise. It just is. It has its own set of attributes and characteristics. And so when you start to check the boxes on the distinction of the attributes between a dividend paying whole life policy and a universal life insurance policy, I think you'll quickly deduce that one is far better for the purposes of implementing this process than the other. Does universal life insurance have a place? Of course it does.
Yep.
But from my vantage point, I look at it from this perspective, and it's ridiculously simple. The insurance company itself is making 100% of the investment decision with their money pool as it relates to dividend paying whole life. Would you agree?
Absolutely.
As it relates to universal life insurance, the policy holder is responsible for selecting where they want that side account to be invested. Agreed?
Yeah, you need to be an expert in deciding which accounts.
Yeah.
Right. And you can't be right all the time.
Right. So if you get to become a co-owner of a company that's never failed to produce a divisible surplus, who do you want controlling that investment function on your behalf?
Yeah, I want to leave that up to the insurance company. They're the experts. And if they've never failed in 200 years, leave it to them. Don't change it if it's not broken.
It's all about who, not how.
Yeah.
And so if 100% of the risk is being transferred to the policyholder, that should be your cue to pick up every red flag you have on your desk. If 100% of the risk is being transferred away from the policyholder and you've got all of the contractual guarantees associated with that unilaterally binding contract, I know which option I'm picking all day long. I've never illustrated a universal life policy. I've never sold one. I've never purchased one. And so I understand that it has its place. It is a tool. And I just know firsthand, it's not the best tool to get the infinite banking concept implementation done. And so I just followed my mentor's sage wisdom and advice and have never been steered wrong. And so, yeah, there's a lot of marketing going on out there where you're hearing people recommending universal life insurance policies for the purposes of implementing this concept. I can tell you, I can certainly speak on Nelson's behalf. He would never have supported that. Not by a country mile.
I know there's some U.S. advisors who like to promote IUL, indexed universal life, for the infinite banking concept because they say, you know, there's a floor. You can't lose on an IUL, but the ceiling is also capped.
Mm-hmm.
Right? You know, if the stock market did 20%, you're not going to get 20%. Like you might hit 11 or 12%. And then there's more fees. There's more fees that come with an IUL. I personally, I'm a whole life guy. I had this conversation with Chris Kirkpatrick. He was on here a while ago. We had this conversation. He's a great guy. You know, we had this conversation about IUL and whole life, and you know, we're both whole life. And again, it goes back to what you're saying. You know, I want to stick with a company who's never failed to pay a dividend in 200 years.
Yeah.
every year, even during the worst times. If you take a look at during, the Great Depression in 1929, when between 29 and 1934, you had 9,000 banks fail. Not one insurance company failed. It was actually the insurance companies that helped bail out some of these banks where people were losing their deposits. Even then, the insurance companies were making their dividend payments to the policyholders. 2008, the Great Recession, you had Lehman Brothers. There's so many, but Wachovia, Washington Mutual, so many banks were failing. Not one insurance company went under, and they continued even during when TSX lost 35 points, the Dow Industrial Average lost 50 points. Insurance companies, they were still paying out dividends around 9-10%, even back then.
Yeah, it's again, it's all a matter of just understanding that every financial product just is. It has its own set of characteristics, and if people are wanting to take greater control over the investment function as it relates to their financial objectives, whatever those may be, then a universal life insurance contract is much like a term life insurance policy with a slot machine attached to it.
Yeah.
That's just not something. You're introducing a whole other layer of complexity and risk that's completely unnecessary. Not to mention, I'd rather be a co-owner of the company that is actually controlling that function of investment, so that I get to participate in that divisible surplus that gets generated each and every year. And I also get to sleep really easy at night knowing that my buildup, my accumulation cannot be repossessed. It can't go backward, and it can't lose value.
Yeah.
Those are just characteristics that are important to me. They may not be important to a person purchasing a universal life insurance policy. That's not a bad thing. It just is, provided that they're aware of it.
And you know what? And you're absolutely right. And to that point, there's going to be people that say, hey, listen, I want to shoot for 10 and 12% because, if I take a look over the last 20, 30 years, the S&P 500 has done 12%. Yeah, then go ahead. It's not a bad thing. At least you have coverage, right? But I want to make something very clear. Life insurance is not an investment.
Never has been, never will be.
No, it's a really great place to hold your money, get bond-like returns, and get a whole whack of guarantees with it, right? But if you want to participate in the market, then buy yourself a UL policy. And again, like you said, it's a Bay Street casino. You could win and you could lose it all, right?
That's right.
How does the infinite banking concept integrate with other aspects of financial planning?
Oh, wow. Boy, that we would need a lot more time to cover it, but I'll share with you. I'll share actually one great example. And we did an event on this a week ago. We had, 280 people show up to this event. It was absolutely amazing.
Wow.
And we talked about policyholders who have built up a large amount of cash value, which again is not money, and they have no more debt. And so they're looking for ways to multiply their money. And one of the areas that we delved into a conversation about was dividend reinvesting, which I've been doing personally for the last 25 years.
Mm-hmm.
And I don't shout that from the rooftops. I don't have to. But when you create a dividend reinvestment plan with a number of really high quality Canadian companies that are going to be around long after you and I are gone, that have been consistently raising their dividends every quarter for the past 25 years, it doesn't take much to build a very reliable, dependable stream of passive income that you pay virtually no tax on. Most people don't know. Like you can collect up to $55,000 a year in dividend income from these companies and pay no tax on it.
Mm-hmm.
And so these policyholders are saying, wait a second. So we had one example in particular where the policyholder said, well, I'm doing this for my kids. So I take out a policy loan from the life insurance company. I build this dividend reinvestment plan for my kids of these high quality companies. I gradually and incrementally pay out the policy loan balance over the next 20 years, which it's not going to take anywhere near that long. But the portfolio that the kids have and that the parents get to use until they transfer it to the kids, it's just a perfect complement. It's a great combination. But people are utilizing the policy loan provision for a wide variety of things, acquiring great businesses that are cash flowing. We're in the greatest transfer of wealth phenomenon that's ever happened. And so these great cash flowing small to medium sized businesses that are producing profitable outcomes year after year after year, the owners are just ready to retire. And so there's a number of wonderful opportunities if you have ready access to capital to take advantage of them. Of course, you and I are well familiar with people who are utilizing this process in the real estate space. That can be a very advantageous, but a very dangerous, slippery slope too, because even without the policies, over leverage is something that I see regularly when I interact with real estate investors. They're over levered. All the financial geniuses are telling them about the power of leverage. Nobody's talking to them about what happens when the interest rate lever goes in the other direction.
Yes.
And having control over the repayment schedule of a policy loan can be very dangerous. That's not exactly an advantage for everybody. And so that's why you've got to be very aware of the four characters in the financial play: the depositor, the borrower, the banker, the bank owner. And you've got to be very cognizant of the role that each one of those characters play and the significance of that role. And that's where I think there's a great opportunity for additional education in the marketplace, because people start and stop at the borrowing and then the wealth creation, whatever it is. I start with the loan, I stop with the wealth creation. I've got complete control over the repayment schedule, but I'm so focused on being over levered that I'm not focusing on being an honest banker.
And that's the key right there.
That can spell trouble.
Honest banker. You said it. You have to be the honest banker. The problem where, again, you said, I want to highlight this. You do have control over your payments. That doesn't mean that you start taking and directing those payments to a new shiny object.
Right.
Okay. You direct it as if you were paying back the bank. You are the bank. If you don't treat yourself like the bank, this is going to backfire badly on you, right? You've got to be responsible.
You do. And we share with our clients all the time. And again, one thing I want to give you a shout out for. So you and I had just a one-on-one, a great conversation. This was some time ago. And you said, Jayson, I'm going to start a podcast, a newsletter. I'm going to be out there creating content. And you've done that and you're sticking with it.
Yeah.
Most people don't stick with it. So to your viewers and listeners, credit to you, John, for doing that. And I will say that the more voices you have on your show who are sharing the significance and the importance of this, the better it is for all your viewers and listeners. And so I just want to acknowledge and recognize you for that.
Thank you. I appreciate it. And you know what? And you too. I mean, I'm a listener to the Wealth Without Bay Street with you and Richard Canfield, and I love listening to you guys. And
thank you.
I love listening to even Henry Wong. I love hearing him on there. I just listened to yesterday. You guys were talking about, I think it was an older episode where you're talking about RSP meltdowns.
That's right.
Right. And that alone could be a whole other show.
Oh yeah.
Right.
Oh yeah.
Right. But I thought that was a really great episode, but you weren't on there. It was Richard Canfield and Henry were talking about it, but you guys got some really great content on there too. And I love to listen to it because it also sharpens my skill listening to other people in the business, because I don't view you as competition. I view you as we talked about this before the show, it's a collaboration. We have a mission to educate as many people as we can the truth about money.
Absolutely.
And how to become your own banker and get away from using the banks and their high fees. Because listen, go into any city. I don't care where you are. You go into any city, look at the biggest, shiniest, beautiful buildings. Who are they owned by? Banks.
Yeah.
You got to ask yourself, how do they afford this? It's easy. Fees.
If we do what the banks do, we'll be okay.
Yeah, that's all we're doing. We're just trying to teach you, stop listening to what the banks tell you to do and start doing what they do, because they're not going to tell you what they do because it doesn't benefit them.
That's right.
Right?
And I can't emphasize enough. First of all, shout out to Henry if he's someday going to be viewing or watching this. We often say there's nothing wrong with Henry Wong. And so he's a great teammate. Shout out to Henry. He's awesome. And yeah, I think that where the meltdown happens with those RSP account holders is when they realize that they may have compounded their money, but they compounded the tax problem too.
Oh, the government and they've just helped make the government rich, right?
It's just crazy. And so again, tapping into logic, if you realize the fundamental truth, right? Your money must reside somewhere. Fundamental truth. And if you can contribute almost unlimited sums inside of an entity that you co-own, that you control, you pay no tax on the daily buildup of cash value, which again isn't money. You pay no tax on the death benefit proceeds. You've got ready access to capital on demand on your terms. The government's not hovering over that asset with a giant fork and knife waiting to devour it. It's the greatest exemption that exists in our Canadian tax code today. Logically, how much capital do you not want residing there?
Yeah, most of it.
Just a simple question. And people get hung up. The point I was going to make is they got hung up in, well, if I store more capital there, it is robbing me of storing capital elsewhere. And that's not the case, because your money is premium. That's the depositor. You're paying premium. That's the only thing that grows your policies, is the payment of premium. That's it. When you exercise the policy loan provision, your cash value, which is not money, is the net present value of the future payment of your death benefit. The insurance company says, look, we'll let you borrow against that. So we'll give you real capital, money. You go and spend it on whatever it was that you wanted to finance. Your repayment back to the life insurance company is comprised of principal and interest. The interest component of that payment is a direct contributor to the net earnings of that life insurance company that you co-own. Dividends are primarily calculated on the contribution principal. So whatever steps you can take to contribute to the net earnings of the very company that you co-own, logically, how much of your financial energy do you not want flowing there?
Yeah, because when you're using a bank, you're contributing to their
net earnings,
their executives, their net earnings. And I think we're all a little bit sick and tired of seeing, quarter after quarter record earnings, 2 billion, 3 billion. I think I'm really getting sick and tired of it. And then they start jacking up all of our fees like they didn't earn enough for the executives. Yeah, it's I'm really done with the whole banking system. But here's a question for you.
Yeah.
Why aren't banks and government promoting this? If it's so good, why don't they promote it?
I think it's ridiculously simple. What do these institutions want? They want your money.
Yes, on an ongoing basis.
Exactly. And so it would go completely against their own business case to educate you that you can warehouse capital in this wonderful unilaterally binding contract. It is just an incredible, amazing tool because, John, you and I, along with 100,000+ life licensed agents across Canada, we're the only profession that can create a contractual promise to pay something. There's no one else in the family office that can do that. The lawyer can't do that. The accountant can't do that. We are the only professionals that can create that promise. And then the contract provides all of these additional provisions that protect the owner of the contract. And so high net worth, successful entrepreneurs, successful investors, they catch this very quickly. The infinite banking concept is meant to be caught. It's not meant to be taught. And it starts with reading this book. It's 92 pages. It takes less than an afternoon to get through, but it's going to open your eyes to a whole new financial world. That I can absolutely assure you. I had no idea this concept even existed prior to July of 2008. No idea. And I thought I was doing pretty darn good financially. Very active real estate investor, owned several doors, very active dividend reinvestment plan investor where I invest in very high quality companies. And I thought, wow, I'm doing pretty darn good. Once my eyes were opened up to the problem, the solution became crystal clear and I knew exactly what I needed to do. Yeah. And so this book, if it has even the fraction of the impact on your life as it did on mine, you are going to absolutely fundamentally change the trajectory in your life financially and for all those who come after you. And that's just a fact.
And people, they can still buy this. They can buy this on Amazon, right?
Yeah. Oh, absolutely. Yeah. Amazon will ship it right to your front door. Yeah. And I think there's an Audible version if people prefer to listen than read. I think there's an audio version you can get from Amazon as well. And I'll tell you, you've got to just set aside an afternoon, read the book with an open mind or listen to the book with an open mind and watch what starts happening to your thinking.
Yes. It's a definitely a mind shift.
It is. And then you get to transfer that knowledge to the family.
Yes.
That's the other thing, John. It's so transactional. It's like, well, I'm going to help you because you want to build your wealth with this process. Well, what about your family? I can't tell you the number of key people that I talk to in companies who are like, my advisor never told me that there was an advantage to doing this in my family. I got siloed in my thinking to think that this was just an advantage for my company. What do you mean this is an advantage for my family? And then once they catch it, I mean, we've got 76 policies in our family banking system. 76. Wow. My premiums are going to exceed $1 million this year. Wow. So I either need a psychiatric evaluation or I'm doing something that other people should learn about.
Well, you walk the walk, right?
Isn't that good?
It's great. I just want to highlight something. I asked you why banks aren't promoting it. They don't promote it, but they own a shitload of it.
In the billions.
Well,
in the billions.
In the US, it's over 200 billion of bank-owned life insurance.
Isn't that interesting? Now, what's interesting too is that the banks with bank-owned life insurance, if you hop onto Uncle Google and you type in BOLI, bank-owned life insurance, one of the nuances, like the conventional banks can't utilize these contracts the way that you and I could personally. So they're not borrowing against them to build their buildings or put office furniture in their buildings or anything like that. They're sort of bound by specific utilization provisions of these contracts. So it's not an apples to apples. But if the banks are actually putting billions of dollars of premium payments into these contracts, they're either really stupid and enriching the lives of their stockholders, or they know something that you and I don't. Which one do you think it is?
And they're using tier one money.
Yeah. Why would they do that? Because it's one of the best performing assets on their balance sheet. So of course they want to store more capital there.
Absolutely.
So that should be a very clear signal to all of your viewers and listeners that this is something worth investigating.
Yes. You know, they've, like I said, they've got, if you go into Bully, you will find the banks in the US own over $200 billion worth of this. And it's interesting that a caller, let's do some Dave Ramsey bashing. I can't stand that guy. You know, listen, he's really good in some things. Like, he's really good at getting you out of debt. Like his snowball effect, he's really good at giving some advice. But honestly, he's really bad when it comes to this stuff. There was a caller on there and he said, hey, I just bought a whole life insurance policy for my kid. He's like, oh, I'm sorry to hear that. He's like, well, why would you say that? He goes, well, that was a dumb thing to do. He goes, well, why would that be a dumb thing to do? He goes, banks own life insurance. He goes, banks do not own life insurance. You know why? Because they wouldn't be stupid enough. I just looked at him like, oh my God. Like, I know, Dave, you know the answer to this. It's incorrect. Here's my question for you. Why do guys like Dave Ramsey, Susie Orman, why do they slam whole life insurance so much and promote mutual funds?
Well, I often share, I mean, folks like Dave Ramsey and Susie Orman, they're compensated extremely well to not understand this. Mm-hmm. And where they start and stop is with a product. And so, again, if you just look at this from the distinction of what you're buying versus what you're implementing, Dave is telling you, don't buy this product. He doesn't have any earthly idea what the infinite banking concept is. And he's compensated very well to not develop an understanding of what the infinite banking concept is. Does he help people get out of debt? And does he espouse pay cash for everything, don't go into debt? That can be really effective for some people. Good for him. Or, you know, building a very, very good business around that. But you have to ask yourself, if I understand the attributes of a tool and I recognize the problem and the tool enables me to solve that problem, what on earth does that have to do with Dave Ramsey or Susie Orman? It's not their problem. It's not. You've got a problem. There's a tool you can use to empower yourself to solve it. Dave Ramsey or Susie, who cares what they think? It's not their issue. And so just be very careful where you get your advice from and what you do with it. Because
he wants you to buy term and invest the difference. And you could get 12% in a mutual fund. Dave, show me that mutual fund that does 12% every year. I will put all of my money into it.
Hands down. I would do that in a heartbeat. And
it's not possible.
It's just,
he's blatantly lying. Let's just call it. He's lying. It's just not possible.
And we recorded a great reaction video to that exact video that you're describing. That's on our YouTube channel, Bankers Vault.
Okay.
And so if somebody heads on over to Bankers Vault, they're going to see a full reaction video to that exact conversation that Dave Ramsey had with that father. And I want to share something with your listeners real quick. Would it be okay if I did that?
Absolutely.
So part of what we said in that reaction video was, I'm going to give you this as an example. So one of my clients, Mr. Olson, his 13-year-old son. So Mr. Olson insured his 13-year-old son, and his son was insured for about 6 years, and his son passed away. And it was a horrible accident that happened on the family farm. There was a property that was away from the primary residence, and the son had gone into that property to get something, had climbed a ladder, had fallen. Nobody was there to address that obviously emergency, and his son went into cardiac arrest and passed away. And we were recording a podcast episode. In our office, we refer to it as a 911. So when we receive a 911 that a client has informed us that a family, a loved one, someone who's insured has passed away, we literally drop everything we're doing and we immediately get to work on helping the family. So we're right in the middle of this podcast. I get a Post-it note planted off camera and it reads 911. end the podcast right on the spot. I get on the horn with Mr. Olson. He tells me what happened. I have 4 kids. And that was one of the most difficult conversations I've ever had to have. Could you imagine if Dave Ramsey had been sitting in the room when that conversation happened? I'm quite confident that he's civil enough and has enough brain cells left between his ears that he wouldn't even dream at night of making a comment as stupid as saying, you should, shame on you for insuring the life of your son. Mr. Olson told me not only did the death benefit proceeds help the family celebrate the life of their son, but it also took care of a couple of really rough years that the family had on the farm. Mm-hmm. That's a legacy that no parent would ever hope to realize while their child is alive. And Mr. Olson and I connect as often as we can at or near the anniversary of his son's passing. Just two dads having a conversation. And my heart goes out to him. And so when we put these policies in place, it's not just for all the wonderful advantages that can be taken while you're alive. The fact is, there's a death benefit thrown in for good measure. And it shows up exactly when it's needed the most. My own kids, my 4 kids, each have 6 policies on their lives. My oldest is 15 years young.
He's taller than you.
He's 6'5".
And both huge.
Both him and my nephew are speaking at the annual Infinite Banking Think Tank Conference next week in Las Vegas because they want to get across to an audience full of adults. This is ridiculously simple, and you don't need to make it complex. We get it, and we're teenagers.
I just wrote an application Friday night for a client insuring his 2 boys, 9 and 12.
Credit to you for doing that.
And yeah, I talked to him about it and say, hey, listen, now is the time.
Yeah.
Because they're young, they're in great health, and they don't need it. You want to get the insurance when you don't need it, and they're young enough that the cash value, it's going to just over time, like when the policy's done paying for it, you're just getting dividends every single year, and this thing's just going to grow exponentially. He says, I don't even need it to borrow against it. I want something there for my kids that I can give them and say, hey, I gave you something. I'm giving you, it cost me X amount of dollars, but I'm going to hand over something that's going to be worth a few $1,000,000 to you. That's my gift to you. And yes, it's a very unfortunate story with Mr. Olson, but yes, these things do happen. And in times like this, when you have to bury a child, a nephew, a spouse, your brain's not there, your mind's not there, you can't focus on business, you can't focus on things are going to go backwards. And that's when that money comes in. There is nobody, Dave Ramsey is not going to show up to that farm and give a check to Mr. Olson for however many hundreds of thousands of dollars. He's not going to do that. He's going to say, oh, well, you can cash in the mutual funds if you need some money and pay a whole lot of tax on it. There is nobody out there between me and you and every licensed agent out there. There is nobody else, not your accountant, not your lawyer, that is going to show up to your family's home in the most needed time and present you a check and help get you through the rough times.
Absolutely. I've had to fulfill that duty of care with grace and humility on several occasions in my short 16-year tenure in this profession. And every single time I show up, not one family has ever said, I wish the check was for less money.
Yeah.
Not one. And so we take that, yourself, myself, all of our, colleagues in the industry, when you're faced with that moment where you have to stand up and fulfill that duty of care to that family, that's just another sharp example of why this profession is so fulfilling. And yes, it's hard. It's never easy. It never should be easy. But boy, is it ever fulfilling to be there for the family and to let them know everything's going to be okay. You need to take the time to grieve, to do that. But don't worry, you're not going to have another bad financial day for the rest of your lifetime. And what an incredible honor. And it's very humbling.
And you're going to have relationships with these people for the rest of their lives and their children's lives. And they're going to refer people to you and say, listen, Jayson was the only one that was able to take care of my family. My accountant couldn't do it.
That's right.
You need to meet with him. We're about running out of time. I got one more question here for you. How can people get set up in starting their own, becoming their own banker?
Well, I would encourage them to do two very important things. So one, make sure that you read R. Nelson Nash's book titled Becoming Your Own Banker. And then step two, get a hold of John, connect with him and say, look, I want to create some time to talk about this. I have some questions. I have some insights. And I quite confident, I've never interacted with John in a client or a prospective client scenario, but I'm quite confident he's going to be very thorough and he's going to answer all the questions you have, address any of the insights that are coming up for you. He'll help you put together a policy or ideally a system of policies that's going to address a very specific need that you have. And then have that ongoing interaction with John. Connect with him periodically to talk about how your implementation of the process is coming along. The policy, you can review that with John at any time. Here's the deal. It's just going to grow every day. Yeah. That's it. And you're never going to have,
it's boring.
You ain't never going to have a bad policy review with John. It's just going to keep growing. But
yeah, you're higher than you were last year.
Totally. And where you're going to get the most value is in the ongoing coaching and mentoring. And so two important steps: get your hands on Nelson's book, spend the better part of an afternoon reading it, and then get a hold of John and say, hey, we need to create a time. I need to talk to you. And John undoubtedly is going to take great care of you. So that would be my advice.
Thank you. I appreciate that. And you got a couple books, and let's talk about how people can find your books. You've got Cash Follows the Leader and the Canadian Guide to Wealth Building Without Risk. How can people find your book?
Amazon.
All right.
And we also have a shop on our website that has actually a wide variety of reading.
Give us your website. What is it?
AscendantFinancial.ca. Again, that's AscendantFinancial.ca. And when you get there, just click on shop and it'll take you right to the store. We have a whole bunch of swag and books and all kinds of great stuff. You can shop until your heart's content. And we courier all of our deliveries. We don't send them through Canada Post. We courier them right to your front door.
Amazing. Amazing.
Isn't that good?
That's amazing. And guys, if you're listening to this and you're out in BC or if you're in Alberta, Manitoba, reach out to Jayson if you want to get started on the infinite banking concept. Because you're in is it Edmonton or Calgary?
We're headquartered out of Edmonton, but we are licensed coast to coast, including Quebec. So we serve Canadians from one coast to the other.
Amazing. Amazing. I could go on with this. I had a whole bunch more questions, but we have such a great conversation because we were like-minded people. We're very passionate about helping people. And I know we could have gone forever, but that just saves more time for another show.
For sure. Yeah. I'd be honored to be on your show, to support what you're doing. And again, credit to you. I just want to acknowledge that it's not easy getting in front of a camera. It's not easy creating content week in and week out. And you're stepping up and doing that. So keep progressing, keep creating content. The more of us messaging this, the better. So I just want to acknowledge you for that.
Thank you. I appreciate that. That's all the time we have today. If you like this episode, please subscribe and please share it with your friends. And please go to our website and you can pre-order my book that's coming out called Wealth Without Wall Street, Taking Back Control of Your Money in a Rigged Financial System, soon to be released.
Love it.
That is all for today.
On the show. We'll do some pre-launch on our show for your book.
Love it. Love it. Thank you so much, Jayson. Take care of your wealth and your health.